Hi, it's Carl Allen. In this playlist, I'm going to be doing some deal reviews for you. So part of my Dealmaker Protege program, we review our Dealmaker student deals on a weekly basis. They're anonymized. We put them on a Zoom call. We break the numbers down. We look at the growth opportunity, valuation, what a deal structure might look like, interpreting the seller psychology and how that maps in to a desired outcome in terms of a deal structure. We'll then also look at what the exit options might be for you as a new business owner after you've grown the business and you want to go to market and liquidate the asset. So every single week we review a bunch of these deals, and my favorite deal of the week we're actually going to showcase for you on this channel. So absolutely check these out, and don't forget to like and share these videos, and definitely hit the subscribe button so that you're getting these deal reviews as soon as we release them. So enjoy the video, and I will see you soon. Until then, bye for now.
So there's the numbers. Disclaimer, yeah, it's in place for this one as well. So let's make this a bit bigger and let's go through it. This is Chris's deal. So deal number 2 is a glove manufacturing business. Interesting. Gloves for every occasion: fashion, industrial work, motorcycle gloves, ranching gloves, you name it. These gloves are typically made from animal skins, just what you'd think: cow, deer, elk, that kind of thing. So high quality gloves. The distribution, yeah, it's business to business, wholesale and white label. They do a little bit of B2C. They do sell online from their website, but I get the feeling that that's fairly new. And they didn't necessarily do a good breakdown. They said 33 online, 67 wholesale white label, but it was just a kind of a top level breakdown. But they are on the move in terms of e-commerce on their website. I think it's fairly new, and it's now 33% of their business. Located on the US Eastern Seaboard, trading area is international. Business has been listed for 9 months. The ask price on this deal, $800K. Now, property is owned by the uncle of the owner's wife, not included in the sale. This ownership story is kind of interesting. This is a World War II company. It was started in 1942 by the grandfather, Ted. He sold it to his son, Ned. Ned, I think, sold it to his niece, Gloria, and her husband, Gord. By the way, this was not actually listed on the notes, so I did a little bit of sleuthing here to kind of put this together this way. Could be some errors, I'm not sure. Maybe Chris can fill us in. But then I'm always thinking, no, I don't want Chris to be able to fill us in, because if he knows, he should put it in the notes to begin with. So maybe he's learned something subsequent to when he actually submitted it. But that's the storyline that I could put together on the ownership. Gord is third generation, didn't grow up in the business. It's his wife's business. He's better suited to sales. I don't think he's owned this company that long. He runs it day to day, but doesn't come in every day. He feels like he's the bottleneck. This is Gord talking, husband of Gloria, whose grandfather started the business, right? So he thinks he is holding the business back. Now, he's the 100% owner, which I found kind of interesting, because it seems like it's her family, but somehow or other, he seems to be the 100% owner. He's willing to consult for a handover period to really help put a GM in place, then looking to make a clean break or a clean exit. Now, the motivation for selling: Gord wants to recover his investment in the business. Take a look at the shareholder loans on the liability side of the balance sheet to get a little bit of a insight what that investment was. Plus he'd like to get a little bit more. Then he wants to get into sales in a completely different industry. Now, legacy, not that important to Gord, which we often see when you're the second or third owner of these businesses, and especially if it's not your family, but still unusual considering the history, the fact that this is a World War II company that's been going for 80 years. Gord wants to move out of state. One of the things I loved about the notes that Chris put in is he said, Gord's not interested in legacy, but I am. I'm thinking, yeah, right on, Chris. This is an 80-year-old company. These are leather gloves. I mean, the ability to be able to sort of milk that online, is profitable, seems like a great opportunity. You can come up with a lot of things in 2022, but you can't come up with an 80-year-old glove. So if you've got one, or glove company, I think you really could exploit it in a favorable way. Only 5 employees work in the business, 1 in sales and marketing. They could double in capacity pretty easily before needing more space. They had become more active marketing the business. They're currently sponsoring YouTubers to promote and sell the gloves. I'm thinking, YouTubers? TikTokers. That's what you should be going for, Gord, is not the YouTubers. Go for the TikTokers. That's where the action is. They regularly run email campaigns, which have shown great potential, which is why the 33% online, seems to really be ticking up. So it's kind of like Gord has come to this party late thinking, hey, I could be setting on a potentially little gold mine here with the legacy story that I've got to sell on these gloves. But, it's just kind of too little too late. He wants out. They sell to 10 private label businesses. No additional explanatory information on that one. The production environment from the photos looks pretty dated. Not that I'm an expert on glove manufacturing, but a lot of workstations, handmade. Didn't see a lot of automation. Google reviews show a 4.4 out of 5 ranking on a dozen reviews. I looked at some of the negative reviews and they weren't really quality of the glove negative reviews. They were more like delivery of the product negative reviews. The website is updated. It's easy to navigate. I would say the online e-commerce section is pretty well put together. You get a real good look at them. Mud score average. I think Gord needs to get his price because he needs to get his money out. And obviously he's going to have to patiently wait until he gets it. One of the things that I wouldn't mind getting Carl's take on in this deal is whether, the whole animal products side of this thing is going to be a detrimental factor when you're talking about gloves. There are such things as leather replacement gloves. Not everybody's crazy about animal skins being used for human products, but I did a little bit of research because I was curious. And apparently because it's a byproduct, which is meaning the animal's life is not sacrificed for the sake of making gloves, but for other reasons. And then so therefore, why not use every part of the animal? That only makes sense. There didn't seem to be as much bad publicity, as much intensity around gloves as there are around other animal type products. That's, I think, the exception would be something like, lamb skin and stuff like that. Nobody likes the idea of lambs being slaughtered for the purpose of making lambskin gloves. But other than that, I didn't see it as being a big issue. I know Carl's got a certain interest and take in this area, so I'd love to get his spin on whether this would or wouldn't be a factor in terms of putting an offer in on this business. But it's a tiny business. It's been sleepy for a long time. It's 80 years old. It's in the hands of a guy who has no real feel for this business, wants to get out. He's only in his 40s. So this could be a good little pickup for Chris. The price seems to be right. What do you think, Carl?
Yeah, so what an interesting deal.
Yeah, I thought so.
Let me address the kind of moral piece first before I get into the deal analysis. So it's interesting, isn't it, that I think, there's two types of businesses that use, parts of animals for fashion items. You've got this type of business which looks like, they're using animals that are slaughtered for food and then using those skins to create gloves. It's different to Canada Goose, who have got into a lot of trouble recently. And I have a Canada Goose coat, by the way, which, they kill the geese just for their feathers to put in the coats. Not a lot of people kind of eat the geese afterwards. So I think, you can tell a really cool story around this in terms of the ethical sustainability and that they're honoring the animals by, turning them into products. Maybe there can be some kind of support or donation from the profits to the wildlife funds or something like that. So I definitely think there's a nice story that can be spun around that. One of the things that always makes me ponder deals like this is, this is a business that has been around since 1942, right? Yeah. And it's only doing $800,000 a year, right? It's like, why? You got to ask the question, like, why is that? 80 years this business has been around and it's still there. How many businesses survive 80 years? Not that many. 1 in 100,000 probably survive 80 years. So that's a good thing. But, why isn't this a $100 million business? If you've been at it for 80 years and you were in the market, I just looked at the market stats. Gloves, it's a multi-billion dollar market. I think this has been a little lifestyle business, hasn't it?
Yep.
For a period of time. No one with any business skills has ever really owned it and looked at how to exploit it. 99% of this business should be online, not 30%. So for that reason, one, I think there's a huge growth opportunity here. Two, it's been around forever. So that tells you that, it's a sustainable business. And three, I think there's a powerful story that can be told around the fair, that can help this grow even more. So I really like it. Not concerned, but I've just done some math, right? I think this guy just wants his shareholder loans back. That's it. I started when I wasn't looking at the numbers, I was looking at the notes. When you said, hey, he just wants his money back out of the business and he's done. The question I wrote on my Remarkable, got to get a Remarkable, guys, they're really cool. No, I'm not an affiliate. But on my Remarkable, I've written, what was his investment? And then when I looked at the balance sheet, it's the $645,000 that he's put in. So I've done the math. The $800,000 after 20% tax, which I'm guessing is what he'd pay on this, is $645,000, right? So he's thinking, I'll sell my business for 800, I'll pay the tax, and then I'll get my shareholder loans back. So what I would do on this deal is I'd do a 5-year annuity. I would pay the $645,000 back over 5 years, and it's going to be tax-free for him, because if he's put the money into the business as a loan, him getting that money back out of the business in 99% of cases will not accrue any tax for him. He'll pay tax on the interest if he's received that, but I don't think he has. So I would try and do a deal on 5 years annuity to pay back the 645. But then what I'd also do, if that didn't work to sweeten it, is I'd put a little earnout in there, and I would show him my plan on how I was going to blow this up and basically move the vast majority of it to kind of online. I talk about the sustainability story, all those different things. I wouldn't take this retail. I think this is definitely an online business. I think, you could do deals with all the online survival companies. Yeah, I think you've got really good margins. 75% gross margins for this type of stuff is insane. It really is. One of the only things that would happen, though, I think, to reduce that margin is it wouldn't surprise me if these guys are making all the gloves themselves. I don't know. But are they making it themselves, or do they have a third-party manufacturer?
No, they're making it all themselves.
Yeah. So at scale, so if I wanted to 10x this business in the first year and get it from 800K to, at least 8 million in the first year, you're going to have to move to third-party manufacturing, which is going to depress your margins, right? So you might see gross margins, come down, but then your operating overheads, you can sweat as you scale this. So I can see a business where at 8 to 10 million, you're making a couple of $1 million in profit and having all the manufacturing done by somebody else. You need to look at the supply chain for the skin and all that different stuff. But again, I think that's just stuff you've got to figure out. So I really like it. One of the only challenges with a deal like this is, apart from the SBA, there's no other way of funding a deal. It's not worth doing a sale and lease back on $135,000 of machinery and equipment. And probably some of it's been there since the 1940s. So assume there's no financing on that. There's hardly any AR because it's primarily a B2C business. I'm guessing there's a little bit of surplus cash. So maybe you could give him 50K as a closing payment out of that surplus cash, and then just basically pay off the shareholder loans over a 5-year period. If he wants all the money at closing, I think the only way you could do that is to go down the SBA route, but then he's going to pay tax on that money. So I think the sell to him on this is, don't pay tax on the closing payment. Let me just pay you the notes back over 5 years. If he wants all that money up front and wants to pay with the tax, then you'd have to go down the SBA route. I think this is a nice little deal for the SBA, but whether you're doing a $5 million deal or an $800,000 deal with the SBA, still takes 3 to 4 months. I personally wouldn't do an SBA deal on this. I want to keep my powder dry for other deals. So as you know, there's a $5 million limit. For me, I would do an annuity deal plus an earnout, or maybe even you give him 10%, take back in the equity when I grew this up and sold it for 10 million. That's maybe what I would do. If he's up for one of those deal structures, I'd just be a high green light for me. If you wanted to do an SBA deal, I would probably not do it. But that's my thoughts.
One thing I do want to note here is, obviously, when we're doing red light, green light deals late in the year, we get interim results. We very often extrapolate them. But it wasn't entirely clear to me whether this was the 8-month results or whether it had already been extrapolated or projected by the seller. So there's a chance that that's an 8-month number and not a 12-month projected number. But if that was the case, then obviously 2022 would be super mega banner year, because you would increase this number by 50%, which is already higher at 8 months than it was for the previous 2 years. So that's something to factor in as well. And again, it's just, I don't like when brokers don't make this clear to us. We're outside, we're not insiders, we're outsiders. Tell us the damn date in terms of what you're putting out there. Don't make everything so ambiguous. Me ranting on the brokers again. The Goodwill, one of the things that we take a look at here is there's 238K, almost 250 in owner's equity. It's an 800K deal. That's 550 that we're paying for the Goodwill. That seems reasonable, but that's propped up by the fact that they got $445K of goodwill themselves on the balance sheet. I don't know what transaction that's associated with. Don't know if that's a good number. Once again, we're getting compiled statements, so no accountant has, put it to the test in terms of whether this should or shouldn't be impaired, whether it does really represent value or not. Should it have been written off? It very well could have been. If that was the case, then...
Question, John.
Yes.
Do you think somebody's bought this thing recently, and that's the goodwill is the amortized purchase price?
Yeah, to me, Ned owned this business, right? And he didn't, Gloria didn't inherit it, so she must have bought it.
Yeah.
So Ted gives it to Ned. Ned runs it for quite a few years. He wants out, right? He doesn't have anybody to, leave it to in terms of an inheritance. Gloria says, I'm interested in it because her husband Gord says, sure, right? So then maybe Gord puts up some of the money and he goes, even though it's your family, we're paying for this thing, straight up. So I'm going to own 100% of the shares. And that very well could be what that number's all about.
Yeah. And so one question I would ask is, when did that transaction take place?
Yeah, would be nice to know.
And then I'd outright ask what they paid for it. And if they wouldn't tell me, you could probably work it out. So we know roughly today he wants $800,000 for it, yet the net book value of the company is $238. So today there's $562,000 of goodwill in this deal. And we know that amortization is normally a 20-year term, so it's 5% per year. So if the deal was done in, say, the last 5 or 10 years, if it's only the last 5, they probably paid the same amount for it that they're looking to sell it for.
Yeah.
But then it doesn't make sense, because let's say he's paid $800 for the business. There was $562 of amortization. Some of that's been written off. You'd be able to see that in the income statements. In the income statements, there'll be a line for amortization. There was one in 2020 and one in 2021, but that included depreciation as well. On only $136,000 of equipment, you wouldn't have between $30,000 and $40,000 of depreciation charges. So some of that is amortization. So,
well, it wholly depends upon what the transaction was. So they set up an SPV, bought the assets of the prior company. They got the bump up in the depreciable assets. Most of it was allocated to goodwill. Yeah. So they do have this goodwill taxable account that they can write off over 20 years on a tax basis if it was an asset purchase. If it wasn't, then it's going to look a little bit different. So, you do need the background information on exactly how the transaction.
Yeah, you do. But let's assume they've paid something for this business, and does he want his money back and his shareholder loans? So that's an interesting question then. He wants $800 for the business. Does that include the shareholders' loans, or does he want the $800,000 plus the $645,000 of shareholder loans as well? Is that a real debt? Because if it is, it's not worth $800K.
No, we make that point every week almost on red light, green light. When there's a bunch of financial debt on the balance sheet like there is now, is the $800K the enterprise value or the value of the shares? The only person that can answer that is the seller, Gord. What does he think that 800 represents? And if he thinks it represents the value of the equity, then this thing is way overvalued.
Yeah.
If it's the enterprise value, it's a little more reasonable.
Yeah. When you said in the notes, John, he just wants his money back that he's put into the business, in investments in the business, is that purchase price plus the loans or just the loans? Because for the new people on the call that maybe got a bit lost in that amortization kind of conversation, think about when you buy a house, right? If you buy a house that's got a mortgage on it, the equity value that, let's say you're buying a house that's worth $800,000 and it's got a $650,000 mortgage on it, then you're paying $800,000 for the house, but the value of the equity in the house is only $150, because the seller's going to take your $800, pay off their mortgage, and they're left with $150 to then go and do whatever they want to do with. It's the same in a business deal. The business is valued at $800, but if you're paying for the shares, if you're paying back the loans as well, then really the equity is only valued at $150. So that's the key question that you need to ask. Does he want $800 plus the shareholder loans, or the $800 and he's going to waive the shareholder loans? Because I just think it's ironic that if he pays 20% tax on the $800, it's the exact value of his shareholder loans. So that would be an absolutely critical piece of information before you would go and make an offer on this deal. But apart from that, and I think as well, just understanding what gold actually does within the business and what's it going to cost to replace the work that he does. It doesn't sound like he's in there that much, and the employees basically run it. So you might not need a GM. They might be able to run it on their own. In that case, you don't need to adjust the profit. So those are the two big financial questions I think you need to ask. And then off the back of that, this is either going to be a really cool deal or it's going to be way overvalued and impossible to fund.
Let me answer.
I do like it.
Yeah, I like this deal too. Rock and Rene has a question. Newbie question: is Goodwill the relationship of long-standing customers? I don't know. Do you want me to answer this, Carl, or do you want to answer it?
Yeah, you can answer that.
Yeah, what Goodwill is in a transaction is we always, as buyers, have an ability to either buy a company or start one up. So the whole idea is if I started the company up, I would pay X amount of dollars for the assets. I deploy those assets. I start generating income from my business, or I can buy one that's already made, right? But should I pay the same amount because I'm getting the same assets after all? Well, no, I'm going to pay more for the business that's already there. Why? Because they have cash flow. Hopefully they've got historic cash flow that they've been able to generate by brand equity, barriers to entry, intellectual property. All these things put together that are intangible have allowed them to generate a superior or a premium cash flow. And so I'm going to pay for that. I'm going to pay extra above just what the book value of the assets are. And the difference between what I'm going to pay and the book value of the assets is the accounting concept of goodwill. So goodwill is an accounting concept. It has to have a transaction to show up. You don't get goodwill on a balance sheet, right? Coca-Cola, I think, has brand equity of $83 billion, right? It's the most valuable brand in the world, but you're not going to see that $83 billion item on their balance sheet anywhere, right? That's the goodwill associated with their name, but it's not there because there was no accounting transaction that happened. Goodwill only shows up on financial statements when there's a transaction. So what happened is this person bought the business for an excess of the fair market value of the assets. And so then you have to allocate the purchase price to all the assets that you bought. And if there's anything left over, it's called goodwill. In this case, there was 445 plus of goodwill. We don't know how much more because some of it has been depreciated.
Yep.
Now, I don't know. I gotta get Alex Silva on here. A red light 100?
Hey, John. Sorry, it's just for me, right? So for somebody else, it's probably that is in the arena or in that type of business, it might be a good business. But I'm looking at it this way: the adjusted EBITDA is $187,000. I don't want to buy a job. I don't want to run the business, right? So I will have to put a GM in there. And if I put a GM, let's say it's $80,000 plus debt, I'm negative. If I take the best year, which is 2022, that number, you have it there. It says 8 months. It's an annualized number with 8 months of this year.
It may be or may not be. We don't know.
Right. Well, that's what it says on the form. So.
No, but that's why I explained what I explained. Usually when I say 8 months, I do annualize it. In this case, I didn't because I thought it might have already been, but that wasn't clear whether it had or it hadn't. So that was exactly why I explained it that way.
Got it. I've seen quite a few deals from brokers where they annualize the number with numbers from June, August, September.
Yeah, Alex, I've seen hundreds of them. Yeah, very often exactly whether you should annualize them or not. In this case, it was not the information that was available.
Yeah,
it was information where it could have been either one of them.
David Geralt looked at this on the team call, thinks that those numbers are annualized.
Yeah, that's what I was wondering about, David. I thought it looked like it was already annualized too.
Yeah,
that's what I was saying. So anyways, that was my rationale. It's just 2022 it's skewed a little bit higher since we haven't finished the year. But it's just a little bit of
No, I think it's a good take. No, that's good.
But thanks for calling me.
I'm a low green light on this, and I'll tell you why. I'm really excited about the opportunity of scaling this to the moon with my online marketing chops and the team that I built. I do sense some high motivation to get out of this business. The reason why it's not a much higher green light is there's two big financial questions that need to be answered. Is it purchase price plus the loans? And then what is, Alex, to your point, the real normalized profit when you potentially put people back in to do that work? But I think any sort of annuity deal on this for me, I would do it, because if this guy said, yeah, I'll take a 5-year annuity on this thing, plus an earn out, plus let me keep 10% of the deal, I would definitely buy this business.
Let's get David Geralt on here, because they handled this on their team call last night. And so therefore, David might have a little bit more insight onto a couple of these questions. David, you want to jump on here?
Yeah,
I guess the big one that Carl just posed was, is the $800,000 what he wants enterprise value, or is this what he thinks the value of the equity is worth? Did that come up?
Yeah, that wasn't really clear. We didn't touch on that. Right. One of the things we talked about is Chris had commented that he was specifically looking for something that would be a investor role, not a hands-on role. He's not looking to buy a job. So we talked a lot about this business, and I think kind of everybody's consensus is, if you buy this at the size it's at, you're going to have to jump in and get your hands dirty. You might have to put on gloves to keep them from getting dirty, but it's going to take some work. The comment I just threw in there, I'm kind of a red light 20 on it because of that. I think if you put a manager in there, then it's not worth $800,000. It's not worth the debt unless you can get that debt stretched out. I think the debt may be what's owed to the uncles from when they bought the business. I don't know that it's necessarily owed to the current owner. So if you could stretch that out, defer it a little bit, get some room to come in there and ramp up the sales, then maybe it could work. Use the EBITDA you've got right now to pay a GM to get in there and ramp it up, and then start servicing that debt 12, 18, 24 months down the road. That could work.
Okay, fair enough. Yeah, I mean, the thing that put me in the position of thinking it was his money is he said he did want to get his money back. So that was what did it for me. Let's bring Anna on here, because Anna and I think alike. I would greenlight this deal for sure. Anna, do you want to unmute and give us a little bit of a take? I mean, it was a mild green light, but at least it was a green light. I'd love to hear your take on why. You there, Anna?
Yes, I'm here.
Hey, Anna.
Hi, Anna. Nice to see you.
Nice to see you. There's too much that's needed. I see the potential, but there's too much needed for you to clean up the business. Like David said, there is too much that's needed to bring it to where it needs to be. And my fear is that you would get lost in the weeds just trying to grow this business, and you look up and a year has gone by because there is no management in place. I just feel like this business is a little bit inflated. There is just too many things that there is no one particular, except for the story.
That doesn't sound like a green light explanation, Anna. That sounds like a red light explanation.
But the green light part is the story, It's the 80-year story that they have, which is great. But for you to get there to tell that story, you have to work a lot.
See, one of the things that's too bad about this deal is I can't tell you the name for obvious reasons, but it reminded me of the McDonald's movie. I don't know if you saw that or not. I thought that was a great movie. And as he was trying to swindle that business, I guess I should choose my words carefully, off the McDonald brothers who owned it. One of the persons said, why don't you just start up a new company, right? Got all these things figured out. He goes, I would. He said, but you know what? That name is so perfect, McDonald's. I cannot use another name. And this name, to me, kind of almost falls in the same category. Not only is it an 80-year-old company, I think it's got a fantastic name for a legacy type business. The reason why I love this business is you put this in the hands of a marketer. We still have time because we only did 2 deals today. I want to get JR on here if he's still on the call, right? JR is a marketer. Could you take this legacy business, right, that's just getting online, it's got a fantastic name, that's got an 80-year history, that's got really nice looking high quality gloves, and turn it into something? JR, are you on the call? Can you unmute yourself and give us your take on whether this is a red light or a green light deal? I haven't even seen your score, so I have no idea. Oh, there it is.
I would definitely green light this deal. One of my comments was anybody with any e-commerce experience or marketing or sales background would be able to dive right into the deep end of this one without a lot of problem. I think you could drive sales within 30 days and not have a lot of the challenges that I think have been discussed during this, from management to getting more fixed operations on the back end. I think you could find supply chain with this story that could satisfy any type of growth trajectory. The thing that we talk about a lot on a lot of these calls are branding. And John, you just talked about branding, the story, and I won't go off on a tangent, but that's kind of my thing. That's kind of my shtick. If you've got something that you can coalesce around, a concept, an idea, then it makes everything else really, really easy if you know what you're doing. If you don't have a message or you don't have that thing to coalesce around, it really makes the marketing team's job hard. and you've got to strain and stress to force quote unquote a bad position. This is pretty straightforward, pretty simple, and the story's awesome. So I think in the right hands, this thing could be pretty interesting. So that would be my take.
Yeah, that's basically where I'm coming from as well. We haven't even got Chris on here yet. I haven't checked to see if he's on the call or not. Chris Gunnels, I think is the last name. Chris, are you on the call? I didn't check. Chris might have had something on. Okay.
I'm here. Can you guys hear me?
Good. Yeah, Chris, thanks for submitting the deal. Without identifying names or locations or anything like that, can you give us your sort of take in terms of what interests you about this deal?
Really, it was the backstory. It's been around since World War II. I feel like I could drive some good marketing with that and build the business. And the owner basically told me that he's good at sales, he's not good at advertising or marketing, and of course recouping his costs are one of the main reasons why he wants to sell the business. I don't know if that's actually true or not, but I've got to find out and dig a little deeper on his motivation in that regard. But yeah, his backstory, the company's backstory is the biggest driver of why I found this as an interesting deal.
Yeah, no, for sure. It's got the backstory that we don't see too often on red light, green light. So I would definitely be spending more time on it. Awesome. Okay, Carl, that basically wraps up deal number 2. We still got a few minutes.
Yep. Should we do a vote?
Yeah, I think most people have kind of voted, and 2-1 seems to be the consensus.
Yeah,
I'm 2-1. I mean, that certainly was the way I'd be going. I guess some more votes coming in now. Yeah, I like deal 2. It's the latest.
Yeah, so do I.
I've seen it in a while in terms of the potential.
Cool. Alrighty.
So I hope you enjoyed that deal review. Definitely subscribe to this channel. Also hit like and share so that you're getting the very best content from me in real time. Every time I want to announce my deal of the week, I want you to see it so that you can understand it. And what's interesting is the more of these deal reviews that you go through, you'll start to see the patterns. You'll start to see how seller psychology and valuation and deal structure all kind of combine. You'll start to see common patterns when we look at the financial analysis. You'll start to see common patterns in kind of red flags and what the growth and exit opportunities might be if you bought a business like this and you took it forward into the marketplace. So definitely keep watching these, and I will see you soon for the next deal review. Until then, bye for now. Hey guys, I'm Carl Allen. I'm the founder of Dealmaker Wealth Society. I've done tens of billions of dollars of deals over the last 30 plus years. If you're new to my channel, definitely hit like and subscribe so that you can get all of my amazing Dealmaker content in real time. You're not going to miss any of the outstanding information that I'm going to share with you. And if there's a question that you've got, if there's something that you want to know the answer for and you want me to speak to it, definitely hit me up in the comments section and I will record those videos for you and I will get them on this channel as soon as possible. So love having you part of this YouTube community and I can't wait to serve you. Until then, bye-bye for now.